lighting people, a lot of us rely on our own experience and market knowledge to understand the health of the lighting industry in which we work. But if you are in the lighting industry, chances are that the success of your business, whether it be manufacturing, design, distribution, or something else, is tied to the construction economy. So we thought this would be a good time as we turn the page into 2021 to connect with the Chief Economist for Dodge Data and Analytics, Richard Branch, who will join us to discuss some of the state of the economy, both present and future, relating to vertical markets and geographic markets as well. Richard, hello, and thank you for joining us today for 5 big questions.
Thanks for having me. I'm happy to be here, and Happy New Year.
Happy New Year to you as well. Richard, when we look at the economy and how 2020 was just this unpredictable situation with COVID hitting earlier in the year, and now we look at 2021, what do you see as the short and long-term impacts of COVID on the construction economy?
This is a great place to start. The pandemic has had a significant impact on the construction sector and has led to significant pullbacks in construction activity in 2020. As we're now into 2021 and we're starting to think about that future, I'll define the short term as, say, the next 3 to 6 months or so. Let's call it to the midpoint of the year. I think we're going to continue to see the economy struggle during that time frame as COVID cases continue to mount. But once we get past, and that will certainly lead to or suppress construction activity. So the first half of this year is likely to be pretty slow still. But once we get into that second half of the year, we're going to have more and more people vaccinated. We'll start to see pent-up demand hit the economy. The economy will be on much surer footing, and that will lead to a gradual pickup of construction activity in the second half of the year. Now, where will we see that? It'll predominantly start on, I'll call it the private side of building construction. So think residential markets, think warehousing, think office structures, but it'll take that public side of the building market. So think like schools and transportation buildings. Those will take a little bit longer to recover.
Good insights, and promising for the second half of the year that there's some positive things possibly on the horizon. And one of the important economic factors that we follow at Inside Lighting that we publish is the Dodge Momentum Index. So right now we're showing on the screen the latest version of the Dodge Momentum Index, and I was hoping you could walk us through an explanation of what we're looking at exactly.
Sure. The Dodge Momentum Index is a great tool. It's our leading indicator for non-residential building activity. So what it does is it tracks the value of projects, of non-residential building projects, when they first enter the very earliest stages of planning in the Dodge global networks. Now, you'll notice that the DMI, as we call it, hit a low in the summer. This was right after that first wave, the summer of 2020, right as that first wave of COVID infections was hitting the US. But as the summer wore on, the DMI started to show a nice, healthy increase. However, it's actually declined over the past couple of months as, again, the COVID cases have started to rise and the economy slowed towards the end of 2020. The translation of that is that should lead to, again, a kind of suppressed level of construction starts activity in the first half of 2021. The upside, though, keeping the glass half full here, is that if we look at the level of the Dodge Momentum Index now versus where it was, say, back during the Great Recession or in the aftermath of the Great Recession, it is much higher now than it was back then, even as it has slowed. So the upside here is that as the economy starts to show this modest and moderate acceleration throughout the year in 2021, there are enough projects in the pipeline, in the planning pipeline, to allow construction activity to grow stronger in the second half of 2021.
Excellent, thank you. And when we look at those construction starts that you mentioned, last month we saw, I think there was 9 projects in the US that were started up with a total project value of 100 million or more. That's really good info. So can you just give me an overview? How does Dodge Data and Analytics, how does it help companies that are tied to commercial construction become more informed and maybe even grow revenues as a result of the information that you folks are able to produce and share with people in the industry?
Sure, I think there are a couple of key ways that we help here. We're again tracking these projects all the way through their life cycle, from their earliest conceptual stages on the drawing board, as it were, all the way through to groundbreaking when the shovel hits the dirt. So what we're able to do is provide clients insight as to where these projects are, who's building them, and who's designing them, so they can work on getting their products specified in these projects. But because we're also tracking all this data, our analytics and forecasting tools are incredibly powerful. And it allows us to not only size the construction market, but it allows us to predict the future and forecast. So you can imagine being in the crisis that we're in now without a roadmap as to where we're going. And that's really what we are. We're kind of that GPS system giving you the turn-by-turn navigation for the future.
Excellent. And when you look at some of the construction information that you folks assess and you look forward to the year ahead, what do you see as some of the construction sectors that might be more promising for the year ahead?
Sure. Well, again, just summarizing that the economy will still be weak through the first half of the year. So that really limits the ability of construction to post like a really significant strong rebound early in the year. That doesn't mean all is lost, though. I think the residential market will continue to be strong in 2021. That'll be driven by single family activity. That single family activity kind of works as a leader for other types of building activity. So as residential construction grows, so too will commercial construction. So again, those offices, some warehousing, maybe some retail, and then that as well drags along the more public side of building construction. Things like schools and healthcare and whatnot.
Excellent. When you look at going from the kind of the vertical or building type to the geographic regions throughout the U.S., which geographic pockets look to be the most promising and perhaps even the least promising looking forward?
Sure. In general, I would say large, dense urban areas will underperform in 2021. That's a function both of just the incredible amount of activity that they've seen over the past couple of years, so kind of a payback, as it were. But it's also a function of we were just discussing with the residential market. We're seeing growing residential strength in the suburbs and beyond out into the exurbs. And that will again pull some of that commercial and institutional construction with it over time. In terms of specific geographic areas in the United States, I would expect the South Atlantic region to outperform in 2021. So that's essentially the part of the country from DC essentially all the way down through Florida. I think that'll be one of the stronger regions. In terms of the other side of the coin, I would go to the West Coast and particularly California. I think the high cost of living in California is certainly affecting construction there. And in fact, we're starting to see anecdotal reports of companies leaving the California market for more affordable areas of the country like Texas. So I would think that California might underperform next year.
Richard, a wealth of information, and thank you so much. Learned a lot from hearing you speak about the construction economy. We'll chase you down at construction.com to learn more information. So thank you for joining us today for 5 Big Questions.
Happy to be here, and I hope we can do it again soon.